nagarajhomes.com. Hello everyone, welcome back to the Real Estate Show with your host Nagaraj Annaiah, Bay Area Realtor and entrepreneur. Today we are diving into breaking economic news that has global markets rattled and wallets wondering. The US and China are now officially in trade war. President Trump's tariff announcements on China 34% retaliation on US exports are sending a shockwaves through commodities, crypto, and yes, even your mortgage rates. But here's a twist. While most of the media focuses on fear and free fall, we are asking the real questions. Are there opportunities in all these issues? Joining me today is mortgage expert Apryll, and together we'll unpack what falling bond yields, plummeting oil, and skyrocketing debt mean for you. Hello, Apryll. Welcome to the show.
Thank you, Nagaraj.
All the buyers, investors, and homeowners, don't go anywhere. Today's show is completely full of information packed. Apryll, listeners, if you have any questions and you have a fear going on around, and if your stock markets are like a lot of your investment was in the stock market and you're worried and you recently bought a property, you can give us a call. Our studio line numbers are 877-265-5992, 877-265-5992. Myself, Realtor Nagaraj Annaiah, and I'm talking to Apryll, the mortgage consultant. So 877-265-5992. Any question, please do give us a call. So Apryll, what's happening in around in the mortgage world after all this issues happening around?
Actually, mortgage rates are doing very well. A lot of people are finding safe haven in bonds. So that is really helping mortgage-backed securities and interest rates to come down.
Okay. So can you let us know what the rates today?
Yeah, so the long-term interest rates really are doing well. We have 6.375% for a 30-year fixed mortgage. Our ARMs are sitting for the 5.5 ARM at about 6%.
Okay.
And 15-year fixed is at 5.625% today.
Okay. So listeners, if you have any questions, myself, Realtor Nagaraj Annaiah, and I'm talking to Apryll. Any questions on the mortgages, anything on the Bay Area real estate? Are you concerned about should we buy or sell right now? Are you in one of the offers got accepted, but your stock market is going down now? What do you want to do now? If you have any questions, do give us a call. But how this Apryll, how might the newly imposed tariffs contribute to inflationary pressures, and what could this mean for future mortgage rates? There's a talks going on, especially Trump was telling us, advising us, or he was telling us the rates might go down, right?
Yeah, actually, we anticipate that rates are going to go down and to go down further.
Okay, so that's what as any future homeowners and all, right, or the future buyers, it could be kind of an opening up an opportunity for them, because the rates might, one end, I know the stock markets are falling, but one end, it might be an opportunity to get homes for a good, great price. Right?
I agree. I definitely agree, because definitely they could maybe get them at a better price. And then once they get the better interest rate, payments are going to be a little lower for them.
Yeah, I think, but the issue is right now is they might not have the enough 30%, 40% down, but instead of that cases, they can always start with the 10% down, so that instead of no need to sell their complete 20% down, right? Start with the 10%, as little as 10% down.
Absolutely. I think that's probably a good option for a lot of people that are currently unsure about the market, or they don't want to sell all their stocks right now for good reason. And then once the market rebounds, they can sell those and pay off the home equity line.
Correct. Listeners, myself, Realtor Nagaraj Annaiah, and I'm talking to Apryll. If you have any questions, you can give us a call. You would like to share about your experience, what's happening in around, and you're worried to buy or sell in this time, do give us a call. Our studio line numbers are 877 Bolly 92, 877-265-5992. You can give us a call. So, but you have watched around 2008 also. Right, you had gone through this where especially stock markets at one day goes and drops out, right? What was all the scenarios, and what were the things happening around? Do you think the same thing going to repeat in 2025?
No, because I don't feel that it's the same. There was the other component with that was that a lot of people were qualified for mortgages that they actually did not wouldn't have normally qualified for under current rules.
Uh-huh.
And so those people got very nervous. And once those people, if they couldn't make their mortgage payment or they decided their home wasn't worth it, they walked away or they did a short sale. And
Mhm.
so I don't feel because in the mortgage industry, that's not happening today. So that removing that component, there's not going to be, that was kind of a perfect storm back in those days.
Yeah.
And it's not doesn't have all the components that it had back then.
Yeah, but see, as you said, there's one end all the tariffs are going up, right? So what I'm noticing is like since the tariffs are going up, the home construction cost will go up, right? Because all the materials what we used to get from China for so lower price, you st- mm, you start getting it from there. It is almost 100% up right now. Any aluminiums or any materials you're going to get based on the recent things, it's going to be 100% up, right? So the construction cost goes up for you automatically because you're not going to go and start the all the manufacturing units immediately for us, right? So your construction cost goes by automatically now. And since the construction cost or the one more thing is a delay in your construction will happen because you're depending on the new construction items to come in. So all this automatically what will happen? The prices will start going up more because already the issues of the inventories are so issues. And on top of it, delay in the construction, delay in all these things, automatically what will happen? The prices starts going up again, right? So, listeners, if you have any questions, do give us a call. Myself, Realtor Nagaraj Annaiah, and I'm talking to Apryll, and we are discussing about all this things happening and around. And if you would like to share and if you want to pitch in, you can give us a call. Our studio line numbers are 877-265-5992 or 877 Bali 92. So, like April, like we are seeing a 10-year treasury yields dip below 4% right now, right? How does that translate to today's mortgage rates? Like it's the same thing. Do you think like 5 point? You told me 6% for arm rates, right? In this scenarios, is better to choose the arms, or what do you suggest?
Yeah, so and I think the arms definitely are a better option at this point because if they are lower than the fixed rate, chances are you're not going to keep that mortgage for a long period of time. So why do the higher rate at 30-year fixed when you're probably going to swap it out in the next year, two, three?
Okay, but what do you think? Like for example, arm rates are so less, but a lot of people wants to still go for a 30-year rates. Do you think it's safe to go for 30 years rates because, or it's still the arms are better?
It depends on two things. It depends, obviously looking at the savings, but two, can you sleep at night? There are certain people that can't do an arm loan and they're not comfortable with it. They're not going to sleep well. And in that case, then they should do the 30-year fixed because people have different risk
Correct.
tolerances. And if you're not going to sleep well and be comfortable, then you should get the 30-year fixed. But, at least we can present you with options. You can look at those and weigh that out to see what makes most sense for you.
I think it depends on the individuals, as you said, right? Like, but now let's talk about is this a refinancing opportunity gold mine for people who bought a homes in the past 2 years, right? I think they are the one who should be jumping in around, especially in these scenarios because they got it for 6.5, 6.375. The way the market fluctuating, it might be a gold mine for them.
Absolutely. And I think actually the people that got the 30-year fixed rates,
Mhm.
those are the ones that have really come down a lot. I just refied somebody and got them a rate that was, gosh, it was greater than, I think it was almost 1.5% lower because they actually purchased at the highest it could have been that time period. And it was a family friend and got them like 1.5% lower, which was great. They're a young couple, and so that's a lot of savings for them.
I think they need to watch out, especially what bought a houses right now. I know that right now the refinance rates are a little bit still higher, but coming months, especially in 1 or 2 months, the way the economy is changing in around, it's a good option for them to do a refinance. And let's talk about the scenarios where, like, if they had bought a house with a 10% down and they're doing in a PMI.
Mm. A lot of cases, the houses have valued much higher now, so they can eliminate that PMI in a lot of cases by doing the refinance.
But the PMI option, right? Like if they bought it last 1 year, like from 1 year, like I think they need to minimum have it for 1 year or 2 years to get rid of the PMI. Is it depends on the lender?
It depends on the investor. So Fannie Mae and Freddie Mac don't really say,
Mhm.
but certain investors require different things. So we can't really say as a loan officer and promise for an investor because they will look at it, differently, every investor.
Okay, so basically, uh, depending on the investors, what the lenders better is nothing hurts them to go reach out to the lenders once, ask them like home has been appreciated because the way the prices are changing now, we can see 10 to 15% or 20% easily has gone from last 6 months.
Yeah.
Last 6 months. So, listeners, if you have bought a house recently and you have bought it for a higher interest rate, do call for your lenders, check out with your lenders what is the rates right now going on because it might be an opportunity. Maybe keep looking for, as April was mentioning, in next few weeks or like in a couple of weeks also maybe like the rates might drop so much it might be worth for you to refinance this. Correct. And one more thing is like HELOC options. Is this a time like to get the HELOC and keep the HELOC as the backup money if some investors, especially for the investors, what do you suggest on this?
Absolutely. Yeah, definitely to have a HELOC for emergencies and investments. It's definitely a good idea.
Yeah, because having the HELOCs, especially at this point of the time, where some of these times like homes are dropping sometimes in some areas, especially having a HELOC and going and buying out the property might work out for you in the future because these are all always in a short-term dip.
Hmm.
It's basically the confidence right now. The what's happening is everything is connected, right? Like every day we're watching in news, we are making a decisions based on that. Like you look at the news, okay, that day our lives might be like your stock markets might be plummeted 20-25%, not even realizing that you don't realize that money is needed for you.
And it's always good to have because sometimes when people really, really need it or want it, there might be challenges to getting that at that moment. Whereas if you have it, you're ready under every circumstance. So it is a good idea to have one.
Yeah, it's better, listeners. Like if your home has been appreciated so much, go get the HELOC, get your HELOC backup option. So that way it will help you out for basically if you want to do an investments coming days, the way the markets are changing. And the second thing is a refinance. Look for the refinance as options because the rates are might expect to go down a little bit further down. So if you have any questions, do give us a call. Don't go anywhere. We'll take a short break and we'll join you pretty much soon.
Are you on H-1B visa and wondering if you can buy a home? Yes, you can. With top realtor and mortgage expert Nagaraj Annaiah, you get the best of both worlds, real estate and financing, all in one place. No need to search for separate mortgage brokers or realtors. Nagaraj Annaiah makes the entire process simple, fast, and hassle-free. Call 858-880-4577 for a free consultation and let Nagaraj Annaiah help you buy your dream home today.
Welcome back to the show. Myself, Realtor Nagaraj Annaiah, and I'm talking to Apryll, and we're discussing about the mortgage related in the Bay Area real estate. If you have any questions, you can give us a call. Our studio line numbers are 877 Bolly 92, 877 Bolly 92. So, April, recently there was one law passed like FHA loan programs, especially not apply for a non immigrants, right? Or like illegal immigrants, or like somebody who's an H1B or an L1. What do you think? What do you think that policy going to be? Will it impact the Bay Area real estate? What do you think about it?
I don't think what they're going to change is going to be really outside of what it currently is. I read that, and I don't think it's going to impact anything substantial.
No, I think that's what I also felt because a lot of home buyers are not doing a 3.5% because of the home prices are so expensive already, right? So home prices with the 3.5%, and if you're going to buy a 1 million, your monthly payments are so high, right? It doesn't even make sense for them to go with a 3.5%. And I don't think so it will impact more of the home buyers right now. Correct. And I think let's talk about one of the options is like basically investment opportunities, right? When you're doing an investment opportunities, what is the minimum down payment you require, right? Is it like for the investment properties, is it a 20% down or is it going to be 25% down? How are the rates for the investment opportunities?
So 20% down, and we have options that actually usually in a circumstance of 20% down has a higher interest rate than if you put 25% down, but we have options where those are actually the same. You get the same low rate even with the 20% down.
Okay, so you can do as little as 20% down, right? Like and how are the rates for the 20% down?
They're good. They're actually about 0.5% higher than the standard owner-occupied rates. So something like that would be today, if you did a 30-year fixed, you'd be looking at 6.875%.
Which
Or
is good.
6.5%, I mean, for an arm.
Yeah,
So
I think so. It's like it's a good option for somebody who wants to buy an investment opportunities, right? As because this is a time if somebody wants to start looking for investment opportunities, 20% down, you can go get it with, as you said, 0.5%. I think one more thing I want to talk about is, do you see a lenders reacting to this economic uncertainty? Are we going to see more conservative underwriting or better deals to attract borrowers, especially on these scenarios? Are you seeing any changes? Or is it too early to predict on that?
I'm not seeing any changes because you know what, right now the underwriting guidelines are pretty tight, and basically they evaluate people really well. So I don't see anything getting stricter in that regard.
But let's get the scenarios like basically you would have most of the home buyers would have gotten evaluations or got a pre-approvals with the higher stock markets, right? Or the higher stocks, right? What they should watch out now, especially because stocks might have plummeted 20%, 25%, right? From last 2 months. If somebody is putting an offer, what to consider for? Because you are considered that one as a reserves also some of the times, right? Some of the times is like it might be they might one option we discussed about lower down payment, right? What about the reserves? Are you considered, if you had considered the reserves, will it go impact? And the qualifications, I don't think so. The qualifications might not change, right? What do you think about that?
Yeah, and in most cases, the stock options that are in there, we're not necessarily needing those for reserves and things like that. And so we have programs that as long as you have the down payment and closing costs, you don't have to have all the reserves that maybe some of the other lenders might have. So I would say with it doesn't necessarily impact my borrowers quite as much as maybe it would if you're doing a jumbo program that needs 12 months reserves, that can be a lot. So
I think in your case, the good thing about that you need a 0 months reserves, right? Like it's like just a 0 months. That's a beauty of your loan programs. I think let's talk about that more. Like for example, somebody has qualified with a 12 months reserves or a 6 months reserves. Now because they are dependent on the stock market have done down and they can't qualify for it.
Yeah.
So working with the lenders like you with the 0 months reserves makes a difference right now for a lot of home buyers. They need to watch out for that.
Yeah, absolutely.
And one more important thing, right? Like, see, a lot of home buyers, they would not have sold a stock. They would have said, like, let me wait until the offer gets accepted and then sell my stocks,
Mhm.
which is not the right way to go about it. For example, if you're planning to buy a house in next 3 months or a 6 months or a 4 months, try to keep aside your minimum down payment, so that this uncertainty times it will help them out because they can get a homes for a great deal now. But if you're keeping all your funds on the stock market, then it would basically hurt you. Correct. So do watch out for listeners. Like if you're basically doing a down payments, keep aside early itself. Uh, and what, so that way it will not, your home buying journey will not impact based on how the stock market goes in, because that's the one thing. And are you seeing, April, like are you seeing like any lender credits or rate buy downs more effectively in this kind of a volatile market? If somebody wants to do maybe a 2025, just go 1% more and get the lowered rates, do you suggest for that, or what do you suggest on that?
Right now, I don't suggest people pay points to buy down the rate because it's not going to break even. Usually, in most cases, it breaks even somewhere around year 4. If there's a chance you're going to refi, you're not going to get that money back. So right now, I'm recommending that people not necessarily pay points, extra points for the lower rate, because it just doesn't necessarily make sense, and they'll probably lose out on the money because you don't get it back after you refinance.
Okay, but now let's talk about the DTI qualifications, right? Like, for example, if you're borrowed something on the credit cards, right? When you are qualified for it, the credit cards might not be so much, but when after putting an offer, the credit cards usage might have gone up, right? So how does that goes in? Like, how does the income qualifications, or like how does the credit score basically impact?
So it's based on, I think you're speaking about when the interest rate goes up, what the monthly payments on the credit
Yeah,
cards.
no,
Yeah, so
because they one two things, right? One is they borrowed it. I think when they got a pre-approvals, maybe the credit cards were like usage was less, right? But by the time when the offer gets accepted, maybe the credit card usage went high. Their monthly payments are like might be higher. What do you suggest on that? Is better to pay off, or how do we go about it? In
So
that,
it depends. If it's someone that I've just like done a pre-approval, or if they've just done a pre-approval, they
Mhm,
may not even need to rerun credit, because credit is good for about 4 months for processing. So that may not impact them.
mhm,
But if it's, I mean, basically, I try to look at scenarios where if they don't qualify and they have payments, what's the least amount that they need to pay off,
mhm.
and what has the highest payment for the lowest amount that they would need to pay off. So sometimes they may need to pay something off if that, has changed, and if we're on the line for qualification.
Okay, now let's talk about this fear sell headlines, right? Fear sells headlines, because most of you, if your clients are actually fearful or they're trying to be strategic, right? And how do you capitalize on these moments actually, right? Because this kind of fears right now, it might impact. As an experienced lender, so what do you suggest on this part?
I think there's a lot of opportunity, because I think some people are going to be very nervous, and people that have been trying to get their offers accepted, now is a great opportunity to potentially be able to get their offers accepted if people are nervous, if other people are nervous and not putting their offers in.
I think it's well said, because see, one of the Sunnyvale house we went yesterday, I think this is a great example for a lot of home buyers. This house was listed for 2.6 million. Okay. And we put an offer for 3.05 million as a preemptive offer. Preemptive offer is like before the offer date. The seller said, no, I want 3.5 million. Do you believe it? It's 3.5 million. Okay. We said, no way, we are not going to give it. On the offer date, he got just the 3 million as the offer. Okay. As a seller, they should be thoughtful when to reject. As the buyer should be thoughtful how to when to rise it. Right. That is where the experience, working with the experienced realtor and the lenders makes a difference. Because if somebody would have just blindly given, no, doesn't work out. The seller made a mistake, buyer made a thoughtful approach on that. Okay.
Right.
So if somebody wants to reach out to April, how do they can reach out to that you?
My number is 949-306-8100.
Yeah, listeners, if you want to reach out on this time, especially where the market is volatile, you need a carefully, basically guiding you an experienced realtor. That's where I come into a picture. If you have any questions on your buying, selling, especially selling in this part, is it a good time to sell? We should wait for some more time. If you have any questions on that, what is the right time to sell also, you can give me a call. It's a free consultation. You can go to nagarajhomes.com, click on a WhatsApp icon, and that's the way to connect with me. Thank you so much, and have a wonderful evening. Thank you so much.
Thank you.